sitting there speaking with one of my associates, and I finally was able to actually see on an example on the charts to why I always say the trend lines are subjective. So I want to just show you guys why I was fresh on my mind. So what we're gonna do here is we're gonna rewind the market, and we'll break this thing down piece by piece. Why I say the trend lines are subjective. So we see we have a trend line here. And also, this will kind of show you guys why I prefer horizontal over diagonal. So if we were looking for a trend line at this point, we have 2 points that connect, actually 3 points. We got a trend line here. And Trading 101 always tells us to allow the market or expect some type of bounce at this trend line. So we're going to slow this down, this replay down, and we'll see what happened at the actual trend line. So as we play the market, we're expecting the market to come down. Speed this up. It actually started to get our drop. So we're waiting for our entry. We notice that this is a uptrend. So they tell us let the price, of course, good rule of thumb, let the price come back to you. Don't try to rush into the trade, fear of missing out. So we're allowing the market to play out, and we're just kind of sitting on our hands. So now we're starting to get the market to get some type of resistance up here up top, starting to pull back. And we're looking, our area of interest will be this trend line to participate or catch the retrace and catch this move back up. So we're still waiting here. Bam, okay, we get it right there. We get a nice little move to the downside. Now I'm kind of cheating because I got you guys a zone here, so we kind of see what's going on. But as we see, it's kind of to the point, like what do we do? Market broke the trend line. Typically back to Trading 101, they tell us to wait for the trend line break and play the retest, and it should hold true and drop. So we got a valid trend line. We notice the trend line's been broke. We'll play the market out a little bit and see what it does. And it kind of fast forwarded or glitched, but you guys see that trend line didn't hold true. It just shot past that. It gave us a bounce, but it was a lot lower. So at this point, stop loss probably would have got hit, or you could have been looking to try to go short due to the way it broke. So that's my whole argument against trend lines, or why I say they're subjective. So we look here, 2020 is hindsight, but when we're actively in a trade, it was a little hard to use these data points as points of reference for where the trade could bounce at. So now, when I look at it current day, or like I said, hindsight is 2020. Look how perfect that trend line looked. It looked like if I would have just bought right here at the trend line, I would have had a perfect trade. But I just showed you guys it's not that cut and dry. Reason why I prefer horizontal over diagonal lines. We see here we got market structure here. We got the support equals resistance. We have that zone here, higher highs, higher lows forming. So when you guys look at market structure, you see this got a higher high to a higher low, higher high to a higher low, never really broke formation. Gave us a good entry for the move up. The trend line doesn't count because at first when I was looking to trade, it's a difference between when I'm just coming to the market and when I'm actually trying to trade the right side of the chart. Showed me a good setup, but it blasted right through. So market structure any day, basic support and resistance over diagonal lines. I hope that actually broke it down to you guys and gave you understanding on why, once again, I say trend lines are subjective.